Which brand uses the color red with white script? You probably thought of one immediately: Coca-Cola, YouTube, Target. You didn't even need to think about it. The answer just popped into your mind automatically. That's the power of repetition and association. Those colors, shapes, and slogans have been drilled into your subconscious so deeply that they trigger instant recognition and emotion without your permission. Which fast food chain uses a big yellow M on a red background? You already know it: McDonald's. Which tech company uses a half-bitten apple as their logo? Apple. And which streaming service starts with a bold red N on a black background? Yep, you guessed it: Netflix. You didn't have to pause, search your memory, or think about it. Those images are burned in. That's what constant repetition and emotional association do. They train your brain to feel before it thinks. And that's the exact same process that the market uses to pull your attention, shape your emotions, and steer your behavior without you realizing it. The same psychological levers that make you crave a soda or feel left out of a sale are the exact ones that push traders like us to buy tops, panic at bottoms, or chase hype because everyone's talking about it. Let's start by pulling back the curtain on how influence actually works. Marketers don't just hope you notice, they engineer your attention and emotion on purpose to make you notice. And trading platforms, news feeds, and financial influencers borrow the exact same playbook. Once you see the levers, you can't unsee them. Priming comes first. Priming means a prior exposure quietly loads a response in your brain before you're aware of it. A color, a word, a sound, a shape, each becomes a cue. Red means urgency. Big sans serif font signals breaking. Up arrows feel hopeful, down arrows feel threatening. You walk into a store and see a red sale tag, and you feel time pressure. You open your platform and see a sea of red text in a story about a stock that you're in, and your body registers danger before your prefrontal cortex forms a thought. That's the point. Priming shifts your baseline state so that the next thing you see lands harder. If your morning scroll is filled with rips, explodes, and panic, your nervous system is already tilted before you ever analyze a chart. Anchoring is next. Your first reference point becomes the lens through which you judge everything else. If a salesperson first tells you about a $200 product, then the $60 one that he mentions next feels cheap, even if $60 is still expensive relative to other products of the same quality. In markets, anchoring happens when you remember the prior high, the all-time high, or last week's squeeze, and your brain tags the current price as a discount. Let's say a stock was trading at $200 and you remember that, and now is trading at $60. 60 might sound automatically cheap to you because you're anchored to the $200 all-time high, and sure, $60 is cheaper than $200, but that stock could be at $60 for a reason, and in a month it could be at $30 or less, the penny stock. Cheap doesn't always mean that you should buy. Anchoring also happens with narratives. If the first story you ingest is AI will 10x productivity, every dip in an AI ticker feels like a gift. The danger isn't that anchors exist, it's that they silently bias your risk assessment. You end up defending a thesis to protect the anchor rather than updating your view. Then there's scarcity and FOMO, which play on your survival wiring. Only 3 left. Final hours. Limited mint. These are classic sales tactics. In markets, the language morphs to tiny float, pre-catalyst, before it's gone, supply shock. Your brain translates scarcity as status and safety. If everyone wants it and there's not much of it left, I'll be safer inside than outside. That flips your time horizon from patient to urgent. You shrink your decision window, skip your checklist, and convert a maybe into a must. Notice how often the posts around hot tickers manufactures a clock. Earnings in 24 hours. Unlock in 2 days. Vote tonight. The clock is the ad. And finally, authority and social proof stack on top. A white coat sells vitamins, a blue check sells stocks. When someone you consider an expert or a course of accounts you follow speaks in confident, specific language, your brain substitutes their certainty for your due diligence. They become your due diligence, and that can be dangerous, especially if they are being paid to talk about a stock. Screenshots of P&L, clips from CNBC, a chart with a bunch of lines and arrows on it. All of it signals, trust me, this will go up. Social proof doesn't require truth, it requires repeated exposure and harmonic aesthetics. When 10 accounts echo the same target or thesis, your brain marks it as consensus reality. You're not being foolish. You tell yourself you're aligning with the smart crowd. That's the trap. Because marketing agencies know this, and they pay groups of influencers and trusted influencers to talk about their company, sector, or stocks. Now let's talk about reward loops. Apps are built to keep you checking. Notifications, dopamine blips, variable rewards. Sometimes you open your account and it's green, fireworks, and sometimes it's pain. That unpredictability is the hook. Your brain learns to seek resolution. Maybe this time I'll see it pop. Maybe this time when I open the app, I'll see green. Likes, retweets, and fire emojis on your trade ideas add a second layer of reward that's independent of P&L. You can get a dopamine hit from engagement even if the trade is mediocre. Over time, your behavior shifts towards what is rewarded quickly, not what is profitable consistently. That's how people end up optimizing for attention over edge. Priming, anchoring, scarcity, authority, social proof, reward loops, these don't operate in isolation. They stack. Imagine you wake up to 3 notifications, breaking news in all red font, XYZ stock is surging, tiny low float runner, $200 all-time highs. This $60 is a bargain. Your feed shows green rockets and guru threads. You're already primed with red and green cues, anchored with a $200 all-time high, pressured with scarcity, and validated with authority and social proof, with a ready reward, which is engagement if you post about it, and or potential P&L reward if you trade it. By the time you open the chart, your analysis is retrofitting a decision you emotionally made 60 seconds ago. Here's how this shows up in trading language. Only 12 million float is a scarcity cue. This is the next NVIDIA is an anchoring and authority cue. Everyone's loading is social proof. Don't miss the run is FOMO. It's on sale after a 70% drawdown is anchoring in disguise. Even our brokerage platform's UI and indicators contributes to this, with bright greens for buys, celebratory sounds on fills, confetti on gains, red glare on drawdowns. These are not neutral colors or neutral sounds. They are engineered inputs that tilt your psychology before you evaluate risk. When these cues hit, your amygdala flags importance, cortisol nudges vigilance up, keeping you in fight or flight mode, and your prefrontal cortex, the part you need for planning and following your strategy, gets thrown to the side. That is why it feels harder to pass on a trade when the whole timeline is screaming conviction. It's not just willpower, it's neurochemistry aligning with the cues set in your environment. If you've been primed for urgency, scarcity language will feel like safety through action. If you've been primed for hope, green candles will feel like proof of your narrative. Notice how anchors survive contrary evidence. You'll hear, it was $200, it can get back there. That's the anchor rewriting probability. Or after 3 green trades in a row, overconfidence primes you to size up because your recent wins become a new internal authority. Marketing doesn't only come from outside, your own memory becomes the ad copy. Your highlight reel markets risk to yourself. There's also YouTube thumbnails with red arrows down to induce fear clicks or green arrows up to induce greed clicks. Video titles with urgent, last chance, do this now. Even the cadence of speech matters. Fast talk, countdown timers, bold fonts. On social media and streams, the meme cadence, sirens, rockets, bells acts like slot machine audio. It collapses deliberation into impulse. So what do you do with this? First, name the lever in real time. If you can label it, I'm being anchored to the prior high. That's scarcity writing. This is social proof, not evidence. You're re-engaging your prefrontal cortex. Second, separate the cue from the action with a beat. One slow breath, one checklist item, one alternative scenario. Normally we go from cue to reaction. We want to go from cue to slow breath or checklist item to thinking about our decision to action or inaction. Third, reprime yourself on purpose before exposure. Read your risk rules. Glance at your max loss. Review your bias-proof checklist. You're not going to remove marketing from your world, but you can decide which messages get past your mental ad blocker. The same psychology that sells sneakers sells stories about stocks. Priming loads your emotion, anchoring frames your value judgment, scarcity compresses your timeline, authority and social proof outsource your conviction, and reward loops keep you coming back for more. See the levers, slow the loop, and choose your inputs before they choose your trades. Now that we understand how these psychological levers work, let's zoom in on how they work for us as stock traders. Because make no mistake, the market is a marketing machine. Stocks, narratives, even news cycles are sold to you like products. Think of it as stock marketing 101. A company doesn't just put out press releases for fun, they're emotion engineering. Every headline, every bold keyword, every shiny graphic in a tweet or CNBC segment is crafted to shape perception. Record quarter, AI revolution, industry leader. The goal is to get you to feel something before you think something, because emotion drives action and action drives price. You'll notice the patterns. Press releases drop right before market open, influencers tweet within minutes of the press release happening, headlines echo the same adjectives. That's not coincidence, it's distribution. The same way brands coordinate ad campaigns across platforms, companies and PR teams coordinate narrative campaigns across financial media. It's literally advertising in ticker form. Sometimes they will tell the influencers what they want them to say so that all the influencers are telling the same story as the headlines and other marketing avenues. Then there's narrative marketing. This is the storytelling layer. Every major run you've seen in the past decade, EVs, AI, blockchain, metaverse, space, was a story first. The story gives traders an identity to attach to. You're not just buying a stock, you're joining a movement. AI is the future. Clean energy is saving the planet. Crypto is freedom. Once you believe the story, logic takes a back seat. And by the time the story reaches mass adoption, institutions are already selling to the believers. It's not random, it's a cycle. Stories start in niche communities, get amplified by influencers, adopted by financial media, and then explode into retail euphoria. That's how narratives move capital and how marketing moves markets. Even visual triggers play their role. Green and red aren't just data colors, they're emotional signals. Green equals growth, success, confidence. Red equals loss, threat, and alarm. Add flashing candles, emojis, arrows, or bolded rocket tweets, and suddenly your trading app is a slot machine. Platforms want you to stay engaged, to react, to click. It's the same design language that keeps people swiping on TikTok or shopping on Amazon, or how they keep people in the casinos longer by not having windows. Dopamine-driven feedback loops. Reward reinforcement is the next layer. Think about what happens when you choose a winning trade and see your screen light up green, or when the platform makes a little cha-ching sound. Some apps literally have digital confetti. That's textbook gamification. It makes you feel rewarded for activity, not for discipline. And every time you chase that feeling again, your brain associates trading with pleasure instead of process. That's how impulsive behavior becomes a habit. What's wild is that none of this feels manipulative while you're in it. It feels normal. It feels like information flow. But that's the brilliance of good marketing. You never notice the persuasion, only the feeling it leaves behind. The result? We start mistaking attention for accuracy. The more we see something, the truer it feels, the louder it gets, and the safer it seems. That's the illusion the market runs on. Emotional repetition packaged as data. So the next time you catch a wave of excitement around a stock, ask yourself, am I responding to fundamentals or am I reacting to marketing? Because in the end, a ticker is just a product and you're the target audience. Let's take this a step deeper. Everything we talked about so far, colors, headlines, notifications, influencers, it doesn't just influence you. Over time, it programs you. Your environment becomes your algorithm. The more you see, the more you believe. If your feed is full of hype, your brain learns to chase excitement. If it's full of fear, your nervous system learns to expect danger. And if it's full of education, your mind starts to slow down, think, and process. which is why Penny Boys is such a powerful place to be. Tons of other Discords are where marketing disguises itself as community. Not here. Every scroll is a rep, every tweet, every video, every chart you look at is teaching your brain what normal looks like. And here's the problem. Most traders are feeding their brains chaos, and then wondering why they feel anxious, impulsive, or distracted. It's not random, it's conditioning. Social algorithms are built to amplify whatever gets engagement, not whatever helps you grow. And what gets engagement? Emotional spikes, outrage, urgency, greed. That means your feed becomes an echo chamber that reflects your last emotion, not objective truth. You feel FOMO, so the algorithm feeds you hype. You feel fear, so it shows you more doom. And because of confirmation bias, your mind starts filtering the world through that same lens. If you're bullish, you'll notice every tweet that supports your belief and scroll right past anything that challenges it. If you're bearish, you'll interpret every headline as proof of collapse of the market. That's not logic, that's marketing meeting neuroscience. What you consume, you become. That's not a quote, that's a fact of how the brain rewires. Your neural pathways literally strengthen around the patterns you feed them. So when you flood your attention with hype and noise, you're building mental reflexes that make you reactive instead of reflective. But when you fill your attention with the types of classes we have in the Mind Over Markets education channel, or with the stuff we talk about in our live streams or in these videos, that's when you start rewiring your trading brain for discipline, not dopamine. That's when your instincts shift from chasing noise to spotting patterns. That's when hesitation gets replaced with clarity because you're not reacting to the crowd anymore, you're responding to your own process. You're literally training your nervous system to stay calm under pressure, to think through the storm instead of getting swept up in it. That's the whole point of Mind Over Markets, to give you the kind of inputs that rewire you for consistency. So every time you join a live stream, watch one of these classes, take notes from a class, or do one of the journaling exercises we teach, you're building neural reps. Reps that make patience feel natural, risk management feel automatic, and confidence feel earned, not emotional. Let's do a quick reflection exercise here. Ask yourself right now, what kind of content dominates your feed? Is it hype and rocket emojis? Is it fear and crash warnings? Or is it education and process? Because whatever the answer is, that's what you're training your mind to mirror in your trading. Now let's talk about protecting your mental feed. If you're going to treat trading like a profession, you have to treat your attention like capital. Start with an audit. What are your daily inputs? Who are you following? What's the tone of your Discord notifications, your watch list alerts, or your YouTube suggestions? If it makes you feel anxious, rushed, or triggered, that's not information, that's infection. Next, replace the triggers. You don't have to nuke your whole feed, just change your defaults. Turn off certain alerts from your lock screen, unfollow hype pages that make you react instead of plan, mute tickers that aren't part of your plan or your system, and fill that space with process-oriented content, psychology, journaling, reflection, or even neutral news summaries. Before the market opens, practice what I call a mental ad blocker ritual. Take 60 seconds to reprogram your focus. Breathe, look at your plan, not your feed, and say to yourself, today I trade my system, not my emotions. I don't need to know everything that's happening in the market, just the few things that matter to me and my edge. Because if you don't actively prime your focus before the open, the market will do it for you and it won't be gentle. Here's the last piece, awareness journaling. At the end of your trading day, write this single prompt. What inputs made me feel FOMO or fear today? That's it. It's simple but powerful. Because when you identify the triggers that hijack your emotions, you can start taking back control over them. You can also actively avoid them. You can't stop marketing, you can't stop headlines or influencers or red candles, but you can stop giving them free rent in your mind. Reprogram your feed before it programs your fear. And watch how much calmer, clearer, and more disciplined your trading becomes when you curate the world you live in. Let's bring this full circle. Everything we've talked about today, from marketing psychology to mental conditioning, ties right back into Mind Over Markets. Because at its core, our Mind Over Markets program isn't just a catchy name, It's a daily reminder that your greatest edge isn't a strategy or an indicator or even timing, it's control over your own attention. When you learn to spot manipulation in advertising, you start seeing it in the market. When you understand how narratives are built, you stop falling for them. When you recognize your own triggers, you stop being controlled by them. The traders who make it long term aren't the ones who never feel emotion, they're the ones who know when they're being influenced. They can pause, they can breathe, and they can choose response over reaction. That's what we train here in Mind Over Markets. Every class, every exercise, every reflection is about building that awareness. Building that ability to stay objective when everyone else is getting emotionally marketed into bad decisions. Because the market is marketing. Every day you wake up, headlines are selling fear, influencers are selling greed, and platforms are selling your attention. But when you're conscious of it, when you understand these psychological levers, you become the one selling yourself calm. You become the one buying logic when everyone else is dumping it. So before you trade, remember this. You can't control the ads, the stories, or the hype, but you can control the audience. And the audience is your mind. That's what Mind Over Markets is about. Training that audience to think slower, to feel safer, and to act smarter. If this video hit home for you, make sure to go check out our narrative trading course in the Mind Over Markets education channel. The first class is titled, The Stock Market is Rigged. See you there.